Good evening. This is Brian Stoll for TimingStrategies.com, Monday, October 22nd. I want to go into what our positions are real quick. We are long as of Friday, the 18th or the 19th, Friday the 19th of October, 60% in our end of day system using the Ridex mutual funds for the basket of the Dow, S&P, Russell, and NASDAQ. We do an even four-leg split, long 60%, so about 15% each on each leg of the basket. Friday, which I was not here, I regret not being able to be here, but family matters took priority. We did get the sell-off much deeper in one day than I was anticipating. I was looking for a potential move as far as this trend line, this regression channel that we've got going here just below the low of September 25th, and we closed below it, which technically was a sell signal, but due to the depth of the sell-off in one day, you don't sell into the hole. We actually got a buy signal on that due to the sell-off magnitude, and again, that's why we're 60% long as of Friday. And we got a little bit of a confirmation bar today. So again, as we were looking from Thursday, we were looking to potentially see it hit down to this level on the blue line, and as deep as that blue line, I'm going to erase these now because we got the second sell-off down to that point of 150 half and actually below that. So I'm going to take these out of here so we don't clutter them up any further. The chart gets a little busy, things get hard to see. So with that situation, long 60%. We also took a position today, oh boy, in the, not that, and not that, but in that, in the OIH, using also the Ridex end-of-day systems. We've got an energy and an energy services sector, so both the ETFs you can use to track that on an intraday basis. The OIH, we went long here 10% today, and if we look at the other symbol for the ETF, the XLE, we went long there today also. So that's a 10% position for both of those combined total, and we're looking to get long if we get a confirmation bar above just today's close. We don't even have to, and even a close above Monday or Friday's low. If we can get a move above there on a closing basis, we will add to that 10% long position in the energy sectors. We'll increase that to 20% long total exposure. Other than that, I'm looking for a trade back up, 2.5 to 5% back up into the top of the range on the energies. As far as the S&P, again, we're looking for a trade back up into that 21 bar average, right at about 153. If we can get that, that's another gift from God. We'll kind of update things from there, what we've done at that point. If we can get that, we might short, we might take it off a piece of profit, we might just let it run based on the momentum. So it's too early to tell at this point. What I do want to bring up is if you're looking at what I keep harping on as far as the bank sector, the BKX, another potential buy setup we've got here. I prefer to sell it because I think the banks and the banking sectors are just a bunch of turds, and that's my opinion only. If anybody is looking for a lower risk trade also, you can probably invest in the IYR or the XLF. This is the XLF for the financial sectors. It's kind of a combo of bank and broker stocks. Or you can also invest in the IYR, which is a REIT sector fund, which is a little stronger than the overall banking sector, but they kind of trade like evil twins. So again, there's a potential long setup there. I just don't like the sector. I think we got a lot more to go to the downside with the entire broker-dealer and the banking system as far as the garbage and problems that they keep saying aren't there that will eventually be there again. So with that in mind, if anybody's interested in contacting us, please send us an email to timingstrategies.com or check our website, admin@timingstrategies.com. Interesting point though on the financials and the also the small caps I wanted to bring up. Looking at the IWM, huge reversal day that wiped out about 70% of the down move that we saw in the Russell on Friday. That's just, if that's not a short covering rally, my friends, I don't know what is, because again, the small caps suffer more from the weakening dollar than the large caps. So the cheaper the dollar gets, the harder it is for the small caps to make any progress. My estimation is, again, that that's just a short covering rally. We're looking to get long somewhere in this area, though. If we can get back down to this, we might buy a little more. We already have, like I said, a 15% position in that index as of Friday of that low. But again, I'm looking for a trade back up somewhere into that 21-day average, right at around 81.50 to 82, right in that level, right at the top. Maybe if we can get that 82 point, which could be very easily tomorrow, we'll reassess the situation. So right now it's a day-by-day process, like any other day, but more so now because of the volatility. We've got the FOMC meeting coming in on the 30th and 31st of October. We might just get a lot of chop and mishmash up to that point. So again, real hard to say, but I want to revisit the Qs one last time before I go. And again, the Qs, we've got 11 days here from this gap high to today's close, where we're just getting a lot of churn, and from that gap high we really haven't gone anywhere. So if you went long that on that day, you're right back to break even for the last 2 weeks. Not a happy meal. I think we've got some more downside coming overall based on the whole market, but as of, like I said, Friday we are long, but we'll be very, on our end of day approach. And other than that, we'll see what develops tomorrow. So again, this is Brian Stoll for Timing Strategies, Monday, October 22nd. Check out our website and give us an email. All right, enjoy your evening.